Thanks for joining us here on Market Call. Kim Bolton on the show today. He's President Portfolio Manager of Black Swan Dexteritas, and he's going to take your questions today on technology stocks. Here's how to reach us. You can call us toll free, 1-855-326-6266. You can also email your questions in marketcall@BNNBloomberg.ca. Kim, thanks for coming in today. Good to see you.
Good to see you, Marilla.
Market seemed to stabilize a little bit today, with signals from Washington that they're not going to fire the Fed chair from Donald Trump, and that trade war with China could be softening. The tariffs could be decreased. So people are taking some positivity out of that.
As they should, but we'll see what tomorrow brings.
Yeah. So again, you're advising caution.
Yeah, we when I look at the NASDAQ futures, there's a line that goes all the way back to, December, when it was up around 22,200. Anyway, there's a nice line that goes down, and there it is right there. Yeah, so that 19,000 level in the June contract for the NASDAQ futures is really, really important. It actually breached it earlier today, but it's sort of come off now. So we've got anywhere between 20 and 30% cash across our various accounts, and even in the fund. If you get a close over that 19,000 on the June NASDAQ futures contract, we'll put that cash to work.
What does the 19,000 tell you? What did you see at that point?
If you can draw a line that sort of goes down, and the line actually touches in about 4 or 5 places. So it's a pretty solid indicator. And you can see this morning, it went above it and then it retreated. And there are probably some sellers just on that. Really, if you go back to the inauguration, everything sort of flipped, really. For the last couple of years, the whole idea was that you bought on dips. But then on January 20th, everything flipped and you have to sell on rallies. And I think people are still sort of doing that.
Okay, I just want to ask you about tech stocks because they're coming back up today. Of course, they've been slaughtered in the first part of the year. Do you think all the tariff shock is settled in at this point?
No.
Okay.
I'm sorry to say, but no. I think there is a timeline to it, though. Mr. Trump is going to have to pull back on the rhetoric come the fall, which really means sort of by the summer, because everyone's sort of away and you can't get much done during the summer. So we think the tariff rhetoric is going to continue on until, at the latest, the end of June. Okay. And then they got to focus on the midterm elections, which are a year away. And the last thing they want to do is lose the majority out of the Congress with the House and the Senate. So yeah, I think we're still in for some volatility.
Okay, I do want to bring up a diagram that you sent to us that outlines the robotics ecosystem. We know that Elon Musk, for example, is talking about his robotics and where they're moving forward. We can't get to all of it, right? There's so many players, but give me the brief idea of what we're looking at here.
Oh, okay. Now, the reason I wanted to talk about this is that, for the past couple of years, it's been all about generative AI agents and so on. We think come next year, which means probably, starting in the second half of this year, it's going to be very subject to all about robotics. And this is just a diagram of the ecosystem. So the bullseye is all about the hardware. It provides the physical foundation, ensuring that the robots have all the mechanical capabilities and sensory input. The second ring around it is all about the operating system and software side, which is sort of the intelligence in there, and it allows decision-making and perception and adaptability. And then finally, the outer ring is all about applications and integration of solutions towards specific industries like healthcare or into the hospitality or the transportation. And so this is just sort of the ecosystem, and we're going to talk in the top picks about a handful of those.
Got it. Okay, we're going to take a quick break and line up some of your phone calls for Kim Bolton. He's president and portfolio manager of Black Swan Dexteritas. He's taking your questions on technology stocks. We're back in a moment. Welcome back to Market Call, and thanks very much for joining us. We want to get to your questions, and Philip has written in from Ottawa. He says, can I get your view on BCE? I am down 9%. Should I hold or sell and take my loss? He's lucky he's down only 9% because others are down a lot more. BCE, the parent company of this channel under the Bell Media title, of course, has been struggling, and the stock has been going on a downward slide. We'll take a look at where it is right now. But what's your take on the forward movement for BCE?
Well, you're right. It has some difficulties, and I guess Philip is sort of building in sort of his dividend and everything that is sort of saving him. Because it does have a relatively high yield, it's sort of defensive sector exposure. But the company's elevated payout ratio, the rising debt, weak growth outlook, just presents too many risks. And although, when you look at it, it hasn't really done all that poorly this year versus some of the other, but a lot of the telecommunication companies are in there. So currently right now trading 30.75. We have a 12-month price target of 34.75.
Okay, so some moderate growth to come if he wants to hang on and at least make some money back. Yeah,
you know, Philip, if I always say if you're concerned about it, sort of do a sacrificial lamb and maybe sell a quarter to a third. And then if it goes down, you can pat yourself on the back. If it goes up, you still have the rest of it there.
Okay, so break it up a little bit and go from there. Yeah. Okay, let's go to the phone lines. John is on the line. He's calling from London, Ontario. Hi, John.
Hi, Marella. Hello, Kim. This is my traditional pre-earnings season for tech stocks call to you, and you've done very well in the past. Of the 7 Mag 7 stocks, who do you think is likely to report good earnings, and who's going to rise above the ashes in the next few weeks? Thanks very much, Kim.
Okay, so Tesla, of course, reported yesterday. They not unexpectedly had poor earnings for the last quarter, their first quarter of the year. What is your expectation from the other 6 of the 7?
But then look at Tesla. It's up 15% today.
That's because Elon Musk now says, okay, I'll get back to work, right?
Yeah. It just reminds me of, there was a B of A economist that was on one of the networks, and he was saying, basically, I've been wrong all year, so whatever I tell you, do the opposite.
Wonderful.
But, John, I would say, if the tariff situation simmers down, and I think it will simmer down come the summer, the one that's going to be the big beneficiary out of there will be Apple. But the one that we currently like going into this sort of second half of the year or here in the second quarter would be Alphabet and Google.
Why?
The search is still extremely popular. Everyone is worried about AI and the influence.
They may take over the search, yes.
Yeah. But with their Gemini, and they've been at the front of the line when it comes to innovation in AI. But then they have so many other horses in the race where they can draw from other businesses. Now, mind you, 3/4 to 80% is of their revenues actually come from ads. So it's very important not to sort of fall into this direction of going in a recession, because that will definitely hurt Alphabet. No, it'll hurt everyone. But I think You know, everyone talked about the end of last week, the beginning of this week, the death cross where the 50-day goes through the 200-day moving average on the S&P, but it's sort of recovered there. So I think recession is off the table, and that's why we really, really like Google.
Okay, let's go back to the phone lines, Ed. We have Perry on the line from Toronto. Hi, Perry.
Yes, hi. I just like, first of all, he chose a good day today because the market is up. But I want to check with him about Aristanet. Is Annette, and I know he said the last time that next year is going to be 140, but I mean, I lost half of the one I paid for it. So I don't know really what to do. When is the result? Maybe that time is going higher. Thank you very much.
Yeah, Kimberly comes on the show when the markets are up. He stands by the door and says, if it's up, I'm coming in. If not, I'll see you later. So Arista, tell me about Arista, first of all.
Okay. Arista was actually some fellows, senior people out of Cisco,
Okay.
that went off and started Arista. Boy, this would be back in 2014-15. So they're the ones that do the switches, the routers, the retimers, and it's sort of the hardware, especially for the data centers. So other similar companies to Arista would be Dell okay. Technologies, or even like a Celestica or Jabil. You can see it on the charts how it's fallen off a lot, but so did all the others. If we're correct that this whole tariff issue will simmer down over the next couple of months, going into the summer, I think this is a great place to buy Arista Networks. We have, let's see, so currently trading, around 70, and we have a $138 12-month price target.
138, so almost double.
It's got a great runway.
Got it.
But, you know, it's fallen from grace, as all of them have. Yeah.
And it started falling a little bit earlier than the others. Any reason for that? It started falling and taking this sharp dip in January, came up a bit, and then started going back down.
Yeah. It's a very sort of cyclical business. So before all the tariffs, before the inauguration, there were some concerns with interest rates, and you know, we had the 10-year Treasury in the States go above 450 back in January. This side of the business, the hardware side of the business, is very leveraged, and so it's very susceptible to interest rate moves.
Got it. Okay, we are going to take a quick break. Kim Bolton staying here to take your questions. We're back in a moment. Welcome back. Thanks for joining us on Market Call. We want to get right to your phone calls. John has been holding on the line from Bradford in Ontario. Hi, John. John, hi. What's your question today?
Well, thanks for taking the call. I wanted to speak to Kim about open text.
Do you already own open text, or you're just looking to get into it? Okay, I think we've lost him. What do we know about open text?
Hi, John. They've been extremely active. You know, they were really active during the pandemic through acquisitions like Micro Focus. They also did a recent sale to Rocket Software for about $2.5 billion of its application modernization and connectivity business. So currently trading just above 36. We have a 12-month price target. Well, the average analyst out there has a 12-month price target of $49. So, you know, it's got 13, so it's got about a 30% upside on here. So just as a background, they're very much involved in what's called EIM software, Enterprise Information Management Software. They're the leaders here in Canada. they built their business really out of acquisitions. They've done over 80 acquisitions over the last 5 years. And I'm not quite sure when they are reporting. But, I would definitely buy it here. Maybe buy a third here, buy another third down at 33, and then a final third down, I don't know, around 31.
Got it. Okay. So if you aren't in it yet, that's where your suggestion is. Let's go back to the phone lines. Janet's on the line from Scarborough, Ontario. Hi, Janet.
Thank you for taking my call. I just wanted to ask your opinion on Shopify. Is it a buy at this level? Thank you so much.
Okay, so let's have a look at where Shopify is today. Shopify's done pretty well, of course, generally speaking. So it's at almost 127, just short of that today, up 7%. Would you still buy in?
Absolutely. And there we are. So yeah, currently trading, that's the Canadian side, 127.
I think it's 91.36 on the American.
Yeah.
Okay.
And on Janet, on the U.S. side, we have a 12-month price target of 121.50. It's one of the darlings out of Canada on the e-commerce side. This is the company that enables merchants to manage pretty well their business, all the way from product management to customer relationship, across all kinds of different sales channels. It's a software business, so remember that it's going to be, you have to keep your eye on the interest rates because it is a bit of a leveraged business. But yeah, I'd buy into it here. And I'm just talking in terms of on the U.S. market. So buy it around here at a 86, 87. Add to it down at around 81, and then down at 77.
So you see it getting down to that in the American?
I never get the final third. I'd like to get the first two, right, and just sort of dollar cost average in. But then keep your eye on the ball for the when it gets up towards the price target up there on U.S. version of 121.
Just quickly, are you worried? I know you said you don't think there are immediate concerns about a recession, but this is a company for a lot of smaller businesses as well. Would they suffer quite a bit if there is a recession from people sort of not moving forward with their businesses or not starting up?
Absolutely. But everyone brings up this word of recession. I think it's such a low probability. Can you have slower growth? Absolutely, with all the tariff rhetoric that is going on. But I don't think it's going to actually, because it's self-inflicted. And you can see what he did over the last couple of days, and he can sort of dial it back. He has a lot of people, and Mr. Trump himself is watching the market, and so he knows how to rig it.
Got it. Okay. It's of his own doing and undoing. Let's go to the next caller then. Greg's on the line from Toronto. Hi, Greg.
Hi there. My question's on Lightspeed, and I'm just wondering, do you think the stock was sold, or do you think it's warranted the share price drop? And what was your opinion about that whole strategic review? They decided just to buy back shares instead of selling the company. Thank you very much. I'll hang up and listen.
Thank you very much. Let's talk about Lightspeed, cloud-based point of sale.
Yep, out of Montreal. I'll be honest. A few years ago, I wasn't very enthusiastic about it because you really couldn't believe everything that they were saying.
Okay.
But the management has actually reestablished its credibility. It has a very robust platform. So currently, right now, trading at around 1370. We have a 12-month price target. We own it in some of our separately managed accounts. We don't own it in the fund. So that usually means it's less of an investable and more of a trading type stock.
Interesting.
And I'm not surprised that they didn't want to sell it. And I'm sure there were some political reasons behind that. But, you know, they've really sort of turned it around. You know, when it comes to the products and services that they actually sell, they're top-notch. All the way from the Lightspeed platform to the payments and capital. They have a Lightspeed restaurant, they have Lightspeed e-commerce. But more recently, over the last couple of years, the management has really established much more credibility out there. And so they still have some work to do, and that's why they didn't want to sell it.
Okay, let's leave it there. We have to take a quick break. Kim is going to stick around and go through his past picks when we come back. Welcome back. Kim Bolton with us now, and we're going to go through some of his past picks from April 24th, 2024, so almost a year to the day. Didn't quite make it there. But a year ago, it was Astera Labs that you picked, and it was offered at $70.99 American, and right now it's down to $62.78, so a 12% return and total return drop. They are a semiconductor, but connections business. So what has been going on with them? Are they dragged down by sort of everything else at the start of the year?
Yeah, but they're a much smaller scale because their market cap is right around $9-10 billion. So it's been quite the ride actually this year, because if you go back, I guess it was it would have been in November of 23 that they went public at 39, proceeded to go all the way up. In April, it was up at 70, and then it continued to go all the way up to about 85, 90, collapsed. It was sort of similar to like Palantir, because there were so many stock options. And after 6 months, people could actually sell them. So it actually collapsed from about 85 all the way down, just under the IPO price, and it got all the way down to 36. But then, once all the selling by the insiders were done, because it's an awesome company, and I'll explain what they do, but it went all the way up to $125. And then got caught up in all the tariff and everything, and it's sort of come all the way down to about 55, and currently right now I think it was around $70.
Yeah, it was around 59 now. Would you hold on to it then?
Yes.
Got it. Okay.
But you have to respect that the price target. So basically, what Astera does, it's out of Tel Aviv, and they actually they have the software and services side that allows the processing units, the GPUs and the CPUs and the data centers with all the hyperscalers. It allows all of the data to move quicker and more efficiently with less latency. And so, yes, okay. I like it.
Got it. Let's go to your next past pick, which is Marvell. Marvell Technology at the time was $64.85 US. Down to $55.83 at this point, so 14% drop in return and total return. Same idea, just dragged down by the start of the year and tariff concerns?
Yep. So they're in the semiconductor space. And if you think back, so a year ago, it was all about AI, right? And everyone was trying to find the next best thing to NVIDIA. People were thinking, whether it was going to be AMD, that's what everyone thought, and then there was Broadcom and Marvell, and so we actually recommended both Marvell and Broadcom, and I'll talk about Broadcom. But one of the things that Marvell has really sort of carved out here is this system on a chip. and it actually puts chips out closer to the data, so in phones and so on, rather than just purely being in the data centers. And so this is where they really sort of carved out a nice niche. Currently trading around 54. We have a 12-month price target, $112.50. So it's got a great runway.
So dip in right now is a good time. Broadcom is your last pick from last year. They split stock July 15th of 2024, and it was 1,256 at the time you recommended it, and now we've got the wrong number, I think. Oh, no, it's the stock split there. Yeah, so 178.94, so 42% return, total return 44%.
It's up $11 today, and we have a 12-month price target of $273.25. So it still has $100, right?
A good amount of room to grow. Okay, we're going to have to take a quick break right now. We're going to be back with your questions for Kim Bolton. We're back in a moment. Welcome back. Let's get right to your phone calls. We have Peter, who is holding on the line, calling from Vancouver. Hi, Peter.
Hi, thank you. Great show. And the great Kim Bolton, the tech guru. Today, I'd like to ask you about PLTR, the current darling. Your expert opinion, please. Thank you very much.
Thank you, Peter. So Palantir is what he's looking at. Let's have a look at where Palantir is right now. They're out of Denver, Colorado. Palantir Technology Software Solutions, 178. They're up today by 7% plus, as are many of the tech stocks. Tell me sort of Palantir and what you see for them moving forward.
Thanks, Peter. Good to hear your voice. So they're really sort of the king of the hill in Silicon Valley when it comes to data analytics solutions. And especially in the AI and even in the AI agents. So currently trading just over 100. It's up nicely today. I like this because you can actually trade some options around this. And so what we've been doing, we did it back on Monday and Tuesday, where we went out and sold some puts just sort of under the strike, sort of tiered it, sort of $2 under the strike, under the current, and then $4 and then $6. And so you sell some puts. We have some cash in our portfolio, so we're looking to pick up Palantir at a good price. But then what you can do, if it does go lower, you can just sell some calls on top of it. And so this is just a great stock where you can, it has enough volatility that you can trade it. It is investable too, but you can see what happens certainly in the Trump era that you have to hold on.
Stomach for that.
Yeah.
Okay.
But they're the king of the hill when it comes to data analytics. Everyone wants to work there, and it's a very tradable stock. So thanks very much, Peter.
Okay, let's go back to the phone lines. Roman on the line from London, Ontario. Hi, Roman. What's your question today?
Hi, Kim. I'd very much like your opinion on Micron. I'm holding some shares now, and my cost basis is much higher than what they're trading at currently. So I just was wondering what your opinion is for their analysis and outlook for the future. Thank you very much.
Okay, Micron.
Thanks, Roman. Yeah, it's been quite a ride with this, but remember, it not only gets impacted because of the whole tariff rhetoric, but this business is very, very cyclical because so Micron is more involved in sort of the memory, the semiconductor business, and so currently trading just around 73. It's up almost $3 on the day. Roman, we have a 12-month price target, but realize that you're going to have a lot of volatility in between. But a 12-month price target of $118.50. And so, Roman, if you're under the price right now, I would actually suggest that you write some calls just to get some of that money back, right?
And then hang on.
Yeah. And then if it starts to approach the strike price and you don't want to get called away, just roll the strike price up.
Okay, sounds good. Let's move on then to another phone call. Sorry, an email. This is from John, who says, can I get your outlook for AMD?
Okay. Let's see.
So Advanced Micro Devices will pull up the chart in just a moment, see where they are at today. Up $4.38 or 5% now at $90.63. But of course, also has that big downward slide, actually starting October, so last fall. They started sliding early. Why was that?
So if you go back, for example, a year ago, and I was talking about how NVIDIA was the king of the hill when it comes to the accelerator chips and the graphic processing units, because they bought Mellanox a long time ago. Everyone thought that AMD was probably the next best competitor, and so NVIDIA kept saying that they were selling out. Interestingly, I forget her name, the CEO over at AMD is actually the second cousin of Jensen Huang from NVIDIA.
Interesting.
Be fun around the Christmas tree.
Family rival. Okay.
But they had some production issues. And then they sort of lost second place to Broadcom and sort of maybe even Marvel out there. However, they are coming back. They've got their production back in place for their GPUs. They have that new, what was it called? The Risen. And so they reported back on February the 4th, and they disappointed actually on the earnings side, but that was because of the production issues that they were having in that sort of third and fourth quarter of 2024.
Okay.
But I think they'll come back.
Got it. Okay, we do have to take a quick break. We're going to be back with Kim Bolton in just a moment. Stay tuned. Welcome back to Market Call, and thanks again for joining us. We want to get to an email from Skip. He says, could you comment, please, on Block? So let's take a look. I have Sears in the email, so I'm not sure what's going on there. But the question was actually on Block. Block Inc., which is at $55.93, so just short of $56, and up today by almost 3%.
So this is they changed Jack Dorsey as the CEO. He was the guy that sold Twitter to Elon. And he had another company called Square, which is a payment system. And I can't remember for the life of me why he actually changed it from Square to Block. But anyway, we have a 12-month price target of $83.50. So it has a nice long runway. If there is a company out there in the fintech world that can really be a disruptor sort of to the payments and even the banking system, it's Block. And they're still growing. You know, they're very strong growth prospects on both their seller and Cash App business. But this was actually reinforced recently because they agreed to buy Afterpay, which was the pay later type thing.
Delayed payments.
So they reported back on the 20th of February. They actually missed expectations on both the top and the bottom. However, this is unusual. They actually increased their guidance over the course of the year. Really, I think because of the Afterpay.
Got it. Okay, let's get back to the phone lines then. Omar has a question. He's joining us on the line from Ajax, Ontario. Hi, Omar.
Hi, how you doing?
Good. How are you?
Good, good. My question is about Visa. Just want to know what you think about it. Do you own it in any of your with your investments or your fund? And do you think this is a good time to buy into Visa? Thank you.
Visa, the behemoth.
Thanks, Omar. We don't own it. We actually, Omar, we own MasterCard, mainly because they just had a little bit better upside. However, currently trading, what was it, around 333, 332. We have a 12-month price target of 380. So obviously, this is the biggest of the transaction processing networks. It's sort of rolled over because of all the chatter about recession and slower growth and everything. They reported back on January the 30th, so they're at the front of the line, and they did great. They beat on the top line, beat on the bottom, and they actually raised guidance. We just Omar, like MasterCard because it has a little bit longer runway. You know, with Visa, it's about, I don't know, 16, 17%. With MasterCard, it was in sort of the low 20s.
Got it. Okay, let's go back to the phone lines. Carolyn has been waiting. She's calling from Calgary today. Hi, Carolyn.
Hello, Mirella. Yes, I'm interested in Snowflake. Also, sorry, I'm a first-time caller. So I'm interested in Snowflake, and should I buy, sell, or hold?
Okay, let's take a look at Snowflake.
Thanks, Caroline. We own it. And currently, what is it, trading at around 148? It's up $8 today. Caroline, if you own it, we have a 12-month price target of $225.41. This is an amazing turnaround story. They brought in a new CEO by the name of Ramaswamy, and he's more of an engineer, business kind of guy, and he really understood what Snowflake was all about. So Snowflake is it's a leading cloud-based data platform provider, sort of similar to what we were talking about before when it comes to like Astera. Okay. So it just helps data move seamlessly, quicker, lower energy. They reported back on the 26th of February, and they just blew it out of the park. They beat on the top, beat on the bottom, raised the guidance, but then they got all tangled up in this tariff rhetoric.
So it sounds like you'd hold it if you're already in,
absolutely.
And dip in if you haven't.
Yeah, and if you don't own it, I'd even recommend that you maybe you sell some puts, and then if you get taken, you wanted to own it anyway.
Yeah.
And so yes.
Okay. Let's get to one last question before we have to go. Richard's on the line from Guelph in Ontario. I lied, he's not on the line. He sent an email. Here's what he says. Could I please get Mr. Bolton's expert opinion on Monday.com for future capital appreciation? What is Monday.com?
This is another Israeli company. And I got it here.
So they're at a 250 point, $12 up just today, so a 5% increase.
Yep. So currently trading at 12.5, and we have a 12-month price target of 24.50. So it's got a great runway in front of it. I forget when it reported, but their last reporting was fantastic. It's interesting that you're talking about Monday right after Snowflake, because both of these companies have made a heck of a lot of hay into the data centers and into the hyperscalers. And it just makes the data centers just run a heck of a lot more efficiently.
Got it. Okay, we do have to leave it there for questions, but Kim is going to stick around with his top picks. That's coming up next. Stay tuned. Welcome back. Kim Bolton is with us. He is sharing his new top picks. The first one is Siemens, and we will talk about why he likes Siemens. Siemens, of course, out of Europe, out of Switzerland, right? Two out of Germany, two out of your three picks are European-based. I'm wondering if you're looking more towards Europe generally, or Siemens is standing out for a different reason.
These are new ones to the portfolios, but we've had. Look at the one today that reported SAP. It was up like 9.5%, and it just blew it out of the park. Another one that we own over there is Infineon. So anyway, Siemens out of Munich, Germany. Remember we were looking at that diagram at the beginning, all about the robotics ecosystem. Siemens fits in this sort of the second circle in
rating.
Sort of the software side of things. Although it's a big hardware company also, all the way from railways to software. And it's a massive company. It's a $152 billion company, currently trading. Now, it is an ADR. American Depository Receipt. So you can buy it on the DAX, which is where we buy it, but you can also buy it in New York as an ADR. So on the ADR, the symbol is SIEGY, currently trading right around $107, and we have a 12-month price target of $128. So the reason we like it is that they're one of the, if not the biggest, of the suppliers of software for humanoids.
Okay.
For robotics. But then, it does have all these other businesses, all the way from digital industries to infrastructure type companies. It's huge in the healthcare, massive in the energy side. Interestingly, they just reported on the 17th, last Friday, did extremely well. And then, unbeknownst to us, however not surprising, they announced that they're actually going to spin off their robotics division into its own company, which is going to give Siemens a bit of a lift, and they're saying that they're going to be able to spin it off probably second quarter of 2026.
Okay, and I think they're also building in Ontario, right? There's plan to build some sort of research battery facility in Ontario. Okay, let's get to your next forward-looking top pick, which is Rockwell Automation. Is this under the same umbrella of moving ahead with robotics?
Right. Now, Siemens was more sort of software for the humanoids. And then the next two, Rockwell, is more sort of on the hardware side of things, and so they're headquartered out of Milwaukee, and then
what did you like about them?
So currently trading, and it trades off the NYSE. Currently trading at 232.
We've got it at 241. At this point. Yep.
And we have a 12-month price target of 286.
Wow.
So they're massive into, at least on the robotics side, they're massive on the controller, sort of the programmable logic controller side of it. Robotic integration solutions is its own business. They're big suppliers into the likes of ABB, which we're going to talk about, but also the other big guys on the robotic hardware that actually do the mechanical robots of ABB, Fanuc, and KUKA Fanuc and KUKA are out of Japan. But not only do they have the hardware side, but they also have the software, and even into the security side of it. So they got the whole thing. They reported back on the 10th of February, beating the top and the bottom, and they actually raised the guidance. And so it's the only downside with Rockwell is their margins are a bit skinny.
Are tight. Okay, I want to get to ABB, which you have mentioned already and set up.
Yep.
That's your third pick. I've got about a minute.
Okay. These are the guys out of Zurich, Switzerland.
Yes.
And so they have sort of 4 business units: electrification, motion, process automation, and then finally into the robotics and discrete automation. And I'll just sort of focus on that side of it. So they are hardware. They actually build autonomous mobile robots. And it's more sort of on the industrial side, especially for a lot of the automation, automobile business. So they just reported last Friday, also on the 17th, did tremendously well and raised their guidance. Really, really like ABB.
Okay, ABB. We've got to leave it there for your third pick. We are out of time. Thank you for coming in. Good to see you.
Thanks, Mirella. Good to see you.
We are going to head out right now. Thanks for joining us on Market Call. A quick look at the markets as we go to a break.